Well, welcome everyone. Good morning, good afternoon, depending on where you are in the country. And thank you for joining the EDGE session during IDC's University Day. Our session is Spring Cleaning Your Client Files. I'm David Sutton. I'm the VP of National Accounts and MGAs with the EDGE Benefits, and I'm going to be your presenter for the next 52 minutes. Before I get started, just a quick thank you to all of you for joining me today. I know there's many other things you could be doing with your time, so I do appreciate you spending an hour with the EDGE. We're scheduled to run till 12:55 Eastern time. I promise to finish on time so you can join the next session. So what I'm going to do, I am just going to turn my video off, because I find when I run the video and the presentation, my internet lags. So you've probably seen enough of me. I'm going to turn my video off and we'll continue on with the agenda. All right, so for cleaning your client files or spring cleaning your files, this is the agenda for today. We're going to look at 4 gaps to look in your client files. Number 1 is no disability protection, which applies to many of your clients out there. The stats show that less than 10% of advisors in Canada actively sell disability insurance. So there's many opportunities out there for you. Inadequate disability protection. There's people who have coverage, especially the self-employed, who may not have enough coverage. And we're going to talk about some of the solutions to address that. Number 3 are illness risks that have not been addressed. So that could be your disability illness risk that hasn't been added to the plan, or a critical illness situation where you've got a decline from your traditional carrier. We have a solution for you on a guaranteed issue process to make sure that your client is covered for CI and you've got that fence wrapped around your client. And then the 4th one is our small group opportunities. We've seen a tremendous increase in sales in each of the last 3 years with our small group product. It is a little bit different than your traditional group. It can really help you out, especially in situations where you get declines from your traditional group carrier. And we're going to talk a little bit about that, and then wrap up with advisor incentives at the very end. So the title is Spring Clean Your Client Files, and it can be related to spring cleaning. That's sort of the whole idea of this. The spring cleaning your house, after the winter months, it's easy for all the dust and the clutter to overwhelm our homes. Certainly has overwhelmed my home. And at first it can be a little overwhelming, getting motivated to sort of spring clean the house. But the results are you get organized, you get increased productivity, you have a better mindset, you have awareness of your inventory and where to start. We've got a picture on the screen here of a spring clean kitchen. Certainly not my kitchen, but someone's kitchen that's been spring cleaned. And it really is, the whole idea is get yourself organized. So you can apply this to insurance. And how does that relate to insurance? We believe that it's important to use this ritual, this spring cleaning ritual, not only in your home, but in your businesses. It's a great time to accomplish some of those business tasks that you might have been putting off over the winter months. And, as I said at the very beginning, we've got some suggestions on where you can start in taking a look at your client files. So as I mentioned, these are the 4 gaps that we're going to be talking about today. And why don't we kick it off and dive right into the very first one, which is no disability protection. And we're going to talk a little bit about, the main markets being the self-employed, contract workers, or employees. Now, at the EDGE, we've been around for 35 years now. You can sell our disability products to anyone. Where you'll have the most success with our products is with the self-employed people. That has been our focus over the last 3.5 decades. It's our what I call our fastball, our go-to. And there's some things that we do a little different than other carriers to address and to focus in on those self-employed people. Now, I think everybody will understand, self-employed people are risk takers. Many of you on the call are self-employed, but being a risk taker shouldn't be an excuse for not protecting their lifestyle against disability. And Something that I always encourage advisors to do when they're talking to their clients or their prospects about disability insurance, don't use the word disability. Use the word lifestyle or income protection. Everyone has a lifestyle that needs to be protected. Talk in those terms, because what I find most clients, when you talk to them and you use the word disability, they act like an ostrich. The first thing they do is they hide their head in the sand because they believe it's never going to happen to me. Well, why are we talking about disability? Talk about protecting their lifestyle. And it's a risk that you can shift from them to the insurer. And it's not all that expensive. This is something, again, that we need to do as advisors when we talk to people about disability and protecting their lifestyle, is we need to dispel the high cost myth. Most people out there, most clients out there have the impression that their risk of disability is very, very small. It's never going to happen to them. And the price is astronomical. I don't have $400, $500, $600, $700 a month to spend on a disability policy, when in fact it's actually the opposite. And this is what we need to explain to them. Their risk of becoming disabled, even for a short period of time between now and age 65 or 70, is actually quite high. And the premium is relatively inexpensive. I've run many quotes in the 9 years I've been with the Edge for advisors. And a lot of times they'll say to me, whoa, go back a screen. That's all it costs. So it is something that you can explain to people. Listen, I can work with you to customize a plan to fit your budget. So when you're reviewing your client files, pull out those self-employed clients first, and ask them, I need to speak to you about a program that manages your disabled cash flow in the event of a crisis. Ask them, what is your disability disaster plan? I'll guarantee you they don't have one. What they're doing is they're self-insuring themselves, and that's not good. Just like we wouldn't expect people or encourage people to self-insure themselves for life insurance, we shouldn't be doing it with disability. People just cannot save up enough money to fund a disability. Even over a 3 or 4 month disability, they can wipe out their savings that quickly. There's people that don't need. Some people can self-insure themselves. Bill doesn't need an Edge policy, but unless you got Bill money, you really should have a disability program in place. There's many people out there. One of the reasons why they never bring it up to you or talk to you about is because they believe they're too unhealthy to qualify for a disability program. Perhaps they've got health issues, or maybe they had a heart attack 6 months ago and they figure there's no way I'm going to get any coverage whatsoever, so they don't bring it up. We have a solution for those folks. So we are different than a traditionally fully underwritten disability program, is that we separate or unbundle the injury from the illness risk. So very early on, many years ago, we recognized that there are a lot of clients out there that could not medically qualify for traditional DI coverage. What we realized is there's a lot of people out there that are healthy enough to work, but not necessarily healthy enough to get a traditional disability policy because of their health. Now, a traditional plan, those are your accident and sickness plans, or A&S plans. They write the accident and sickness all together. So if there's problems, like in my example, a client had a heart attack 6 months ago back at work, companies that sell A&S policies are going to decline them for both the accident and the sickness. It's all or nothing. So what we did many years ago is we separated out or unbundled the injury risk from the illness risk. So clients can do one of two things. With the Edge, they can buy either an injury only plan, which is guaranteed issue. All right, there's no underwriting whatsoever, or they can buy an injury illness disability program to cover them for injury and illnesses, and the illness goes to underwriting. So this certainly is in line with the example I've used of a client you might have who had a heart attack 6 or 7 months ago. Back at work, everything's fine. They're not going to get the illness from us because they just had a heart attack. But if they're back working and everything's fine, you could at least get that person an injury plan. So that is one of the advantages of unbundling the injury from the illness. So when we first launched this for the first time, all clients had access to at least injury, accident coverage with no medical underwriting. When it comes to applying for injury, there's two questions. Really, are you disabled right now? And are you working at least 20 hours a week, 35 weeks a year? Guaranteed issue. So if you were to do a policy on me today, you hit submit. We can do this all online. You don't even have to be in front of me as the advisor. We can do this over the phone. You hit submit. My head office is going to take a week or two before that first premium comes out of my bank account, but I'm covered as of today. So after the call, if I fall down a flight of stairs, break my leg, I'm covered. All right. So that's the injury. The illness, what we do, and you'll see the questions that come up on the screen. They are part of the online quoting tool. We have gateway questions to weed out the clients who may have had some serious illnesses in the past, and we don't want to subject them to underwriting. But assuming they say no to all the questions, you can proceed with the application. We go to underwriting. So having these gateway questions, it's a limited. It eliminates the risk, as I said, that we'll not get through underwriting, so it speeds up the process. Traditional disability underwriting, because all the financial and all the medical underwriting is all done up front, can take a couple months, 3 months, 6 months to get a policy or an answer from the insurer. With us, we don't ask for any of the financials up front. The illness underwriting, if they choose illness, on average is about a month or less for us to get an illness policy in place. So these are the questions. Again, we're not going to go through all these questions. These will pop up on the screen when you do a quote online. They need to say no to all these questions. If they say no, then you can proceed with the quote. You won't see the actual 19 underwriting questions until you do the application. All right. If the client, you click on yes to any of these questions, a message will pop up to say the client is not eligible to purchase illness. They can still get the injury plan, and you also have an option to maybe add on $50,000 of guaranteed issue critical illness. The next client files to pull out. Take a look at any clients you've got that are contract workers. So an emerging trend in the 2020s is going to be this increase in what is called the gig economy. I'm sure a lot of you have heard about it, read about it, meaning, excuse me, people will be doing more and more gigs or short-term work projects. I have a very good friend of mine. She has her own company. It's just herself. She does a project management or projects with various clients. She gets a contract, works with that client for a month, 2 months, 3 months. She's done. She might be out of work for a few months, and then she gets another contract. So she is a gig, part of that gig economy. Sometimes they're referred to as freelancers, but the contract workers, consultants, people that don't have your regular 9 to 5 or working all year job. They sort of come and go as the projects come up. So these contract workers, one of the problems of being a contract worker is when they're working for a particular company, they're not offered benefits for the company that they're contracted with because they're not employees. So they cannot join the company's group program and be covered for disability. So they have no disability or any coverage whatsoever when they're on contract with a client. And in fact, LIMRA did a study back in 2019 and asked a number of contract workers to rank what the challenges of this gig work is. And as you can see here, almost half of them ranked access to traditional benefits as a concern that they had. It was actually higher than job uncertainty, which is quite unique. You would think that people who work from job to job on a contract basis would be more worried about getting that next contract. In fact, not being able to access benefits was more of a concern for these people. So there certainly is a shift to these contract or freelance workers. It's only going to increase over time. It's never going to, this pool of people is never going to shrink. It is the way of the future. So how do carriers handle these people who, work on and off throughout any given year? We have a solution. We designed our loss of income program many years ago, which fits this exact situation. When we created our programs, there was very little contract workers out there, decades ago. But the way we have our program set up, they actually work for these folks. So we'll ensure the client, regardless of the number of occupations that they're doing, or gigs or jobs that they're doing. Again, the question that I showed at the very beginning, to get coverage, they have to be working a minimum of 20 hours a week, 35 weeks a year. That's combined. So they need to be able to show that they're working at least 35 weeks in a year. It doesn't have to be 35 weeks straight. It has to be within a year. So that takes care of the problems of coming on and off throughout the year. And certainly the way our income verification works is also completely aligned with people on contract. So as I mentioned, the reason why we can offer injury, guaranteed issue, and illness underwriting within a month, get it done so quickly, is because we don't ask for the financials up front. We ask people, if they do go on claim, to prove their income at time of claim. That's why we can get the plans in so quickly for them. And lastly, take a look at your clients who might be T4 employees. Take a look at those folks, find out what they've got. I always suggest to advisors, ask them, if a client says to you, I don't need any coverage, I've got coverage at work. Ask them, can I take a look at your schedule of benefits page? They all should have access to a policy booklet, or at least a schedule of benefits, to be able to show you what they have. I've been with the EDGE for 9 years. Prior to that, I spent 23 years in the group insurance side. So I can tell you, generally speaking, if your client works for a company with less than 45, 50 employees, now I'm talking in general terms now, they will probably have basic life and AD&D and health and dental. They may not have any short or long-term disability, because it's usually the smaller employers that cut that out or don't offer it to their employees. All right, but you want to ask them, because what I found is that most people who have coverage at work just assume they have disability coverage. Most people, if you surveyed them and you did a skill testing survey with them, would fail. They have no idea what they have coverage at work. Some do, most don't. I'll give you a quick example. A very good friend of mine, not all that long ago, we were talking, and I mentioned to him, you should probably buy a disability program. And his response was, oh, you insurance people, you're always trying to sell me something. And I said, listen, I don't need to sell you anything, but do you have any coverage at work? And he said, well, of course I do. I've got coverage. I've got coverage through Kim. I'm like, you don't have disability coverage through your wife, Chris. I said, show me your summary of coverages page. So the next time we got together, he tossed it at me and he said, there you go, insurance person, read it and weep. And I looked at it and I said, Chris, you've got basic life, AD&D, dependent life, health, and dental. And he looked at me and said, what about my disability? I said, you don't have any. And he said, well, what would happen if something happened to me? I said, you'd go on the EI for a while, and then you better have a sock of money. So this is just an example of a person who had a very good job at this company, a very well-educated person, very bright. He just assumed, because every time he went to the dentist or the pharmacist, everything got paid. He assumed he had disability coverage at work, which he didn't. So you want to ask that question. All right. So the first point, our first spring clean initiative is to close that gap with people who don't have any coverage. Look at your business owners, talk to people, and you might find out, as I mentioned, that some haven't wanted to talk to you because they've got some medical issues and they just assumed they would never get any coverage. You can always get a leasing injury coverage with us. Talk to those contract people and talk to, those people that do have coverage at work. Really dive down to find out what coverage do they have at work, and do they have any disability coverage? All right. That's our first gap. So the second one is inadequate disability coverage. Maybe they do have some coverage, or they purchase too little. So one of the things that we do a little differently at the Edge is how we will look at a self-employed person's income. And the reason why we do that is because we recognize many years ago, self-employed people were underinsured because the way they earn their income is different than employees. Employees are T4 employees. Their income is their income. When it comes to self-employed people, one of the advantages of being self-employed is that you can use your CRA eligible write-offs to write your gross income down as low as possible, get that earned income as low as possible to pay as little tax as possible, which is great at tax time, but not so good if they're buying a policy from a company, disability policy from a company that will only look at their net earned income. They're going to be underinsured. So self-employed people, they all have the same issue to a certain extent. They'll say to you, my taxable income doesn't reflect what I actually make. I need to protect what I make, not what I tell CRA. Okay, so that's why we developed our gross revenue solution. Many Canadian disability insurers, even to this day, will only offer benefits based on net income. So we look at the gross. And as I mentioned, most will write down their income with their CRA eligible expenses. As I said, effective tax planning. Now, I'll take a step back and say, I am not suggesting for 1 minute that self-employed people are, ripping off the government. They're not. But being self-employed allows you to write down your income. So why wouldn't you? So here you got a visual. We've got the business owner's gross revenue. They do their CRA expenses. They try and get that earned income as low as possible to get the taxes as low as possible. All right. So what remains is their earned income, but it's not what they're living on. It's not their lifestyle income. And that's what we're trying to ensure. We recognize that their lifestyle income is actually bigger than their earned, and that's the income we need to protect. So what we do at the Edge, and the system will calculate this for you. When they're self-employed, we can use their gross, and it's a simple calculation. It is their gross revenue from the company, and the only thing you take out is any cost of goods, if they have any, and any employee wages, if they have any. Okay, because cost of goods and employee wages is not part of their lifestyle income. We're trying to get to their lifestyle income. And so we then reduce it by half. So we assume they're writing off 50% of their income, and then we insure 75% of that. Okay, so to give you an example, if you've got somebody that grosses 120,000 a year, in our world, they net 60, and they can get coverage based on that. Maybe they gross 100. In our world, they net 50,000, and you can get them coverage based on that. It doesn't matter what they actually net. We take half their gross. I'll give you a quick example. An advisor I spoke to not all that long ago said to me, Dave, I'm not getting this gross revenue versus net earned. So the example they had was they had a self-employed person. They were grossing 120,000 a year. However, this person was only paying himself $10,000 a year in dividends. So the advisor said to me, like, $10,000 isn't even on your chart. What can I offer him? So again, I said, we just use the gross. So the gross of 120 means in our world, he's netting 60. You give him a benefit, 3,500, I think it worked out to. Based on that, it doesn't matter that he is only paying himself $10,000 a year. Okay, so anyway, that is how the gross revenue solution works. It assumes that self-employed person is writing off half their income. Hey, if they're not writing off half their income, maybe they're an IT consultant that works in their basement and they don't have a lot of write-offs. Fine, then use their actual net to get them more coverage. The whole idea is to be able to offer people more coverage. I often say to people, do people generally buy the maximum amount of disability coverage that they're eligible for? No, of course they don't. It's just like life insurance or critical illness. But as an advisor, I think you'll agree, it's always better to be able to go to a client and offer them a high amount and work down to fit their budget, than go in with a low amount and have them look at you and say, I can't live off that. This is a waste of time. So that's the whole idea of us using these different methods. Now, some of your clients may already have a disability program, an individual or a group program, and they want you to take a look at the program for you. The first thing I always look at is the definition of disability. To me, that is everything. Everything else in a disability policy, they're bells and whistles. I want to know the definition. I want to know when I'm going to get paid and when I'm not going to get paid. If I was looking for a policy, and every policy will have a definition change date, unless they're buying, a fully non-CAM policy that's ONOC to 65. Other than that, group LTD plans will have a definition change date, and many individual plans do. So what happens to them when the definition change date occurs? So at the EDGE, we offer 3 years of regular occupation. So they have to be disabled from their regular occupation to claim benefits. And then what happens? And in fact, that's 1 year longer than LTD plans. Group LTD plans are almost always a 2-year regular OC or ONOC definition, and then it changes. So what all LTD plans do, and what some individual plans do, is they change from regular to any OC at the definition change date. Any OC is by far the worst definition out there. EDGE does not use any OC. I'll repeat, we do not use any OC. Any OC is, as I said, the most restrictive. You have to be disabled from any occupation based on your training, education, or experience. So policies that have an ENIAC definition, in order for a person to qualify, you need to either be really, really, really disabled or really, really low skilled, meaning you have no transferable skills. We don't use that. What we use is a reasonable OC. So the first 3 years, regular OC, and then at that point, we know they're still disabled from their regular OC, but can they do a reasonable occupation? So what that means is there's an earnings test. Can they, based on their limitations, get a different job earning at least 80% of what they qualified for with the EDGE? If they can't, they're still on claim with us. Okay. So the way I describe it is, ENIAC is a duties-based definition. Can you do any other occupation? EDGE's reasonable OC is is an earnings-based definition. Can you earn a certain threshold? No, you're still on claim with us. And then you want to take a look at the benefit period that the person has right now. Is it 2 years? Is it 5 years? Is it to age 65? Our plans, we offer 5 year and to age 70. We do now, rolled out about a year ago, a 2-year benefit period. Mostly we're selling that to non-resident workers that are on work permits, but anybody could buy a 2-year program. I'm not a big fan of 2-year programs. I always try and sell to age 70, unless I've got a client that maybe is in their 60s and they're going to retire in a few years. I'd sell them a 5-year program. All right, so that's the second of the 4. Number 3, now we're going to move into illness risks that have not been addressed. So that could be the disability illness or critical illness. So when it comes to the disability illness coverage, if the client has only bought the injury, maybe because of pricing, Maybe they or they didn't want the illness. They wanted to keep the price down. They really only have half a disability policy. They're only covered for injuries. They're not covered for illnesses. So we really should be talking to them about adding illness so that they're covered for both risks, both the injury and the illness is covered off. So we need to take the time to ensure that we're properly assessing their situation before we're applying, and that we're not allowing them to and then that they understand the pitfalls of trying to buy just an injury policy because they only want to spend $40 a month. If something happens to them and they can't work due to illness, now they're not going to be covered. We really should be trying to cover that off. As I mentioned earlier, when you're doing the quote, there'll be height and weight requirement and gateway questions that you need to answer. I showed you that a little earlier. The whole idea of that is to weed out people that are not going to get through underwriting. Assuming they're fine with those questions, when you're doing the actual application, there'll be 19 underwriting questions that you need to go through with your client. And they're a simple yes or no. If you're saying no to everything, fine, you move on with the application. If there's yes to any of them, and most people over the age of 40 will say yes to something, that's when we need to make sure when you click on yes, a little box will open up. You need to indicate, be specific. What was the condition? What's the current state of the condition? Did the person have to take any medication? Are they on medication? Giving as much information as possible helps. And it helps with the underwriting process. If there's gaps, if any of you have ever been an underwriter or worked with underwriters before, underwriters are conservative by nature. If there's any gray area or if there's something an underwriter doesn't know, they usually err on the side of caution and become too conservative with the underwriting practices. So we want to make sure that we give as much information as possible. And then depending on the amount that they've chosen, their age and how they've answered the questions, we may need a phone interview or we might need blood and urine. That'll all be taken care of from our disability department. So you don't need to worry as the advisor about, setting up or organizing, a paramedical exam or anything like that. We'll handle that for you. So that's the illness. Now, when we come to critical illness, so there's a couple different times that advisors sell our critical illness. One is, hey, they've got a client, as I had mentioned earlier, that they've got some health issues, so they're only able to get the injury coverage. Well, you could top them up with 50,000 of CI. Most of the time, we're selling our CI with advisors who have tried to put in a CI app through their traditional CI underwriter and got a decline. You've got somewhere to go now. And as we're saying here, individual CI plans, they continue to see a high rate of decline or being rated, which makes it difficult to get coverage. The good thing about CI is that more and more people are aware of it than they were even 20 years ago. With the advancement with medical technology, things that used to kill us 20, 30, 40 years ago are not killing. We are surviving these. So the good news is that we're living longer. The bad news is that we're living longer. Hence the need for critical for CI coverage. And Canadians know the stats. So it's actually becoming easier to have that CI conversation with clients. But the nature of critical illness is the more apps you put in the system, the more declines you're going to get. It's just the nature of the product. And it is a difficult message to explain to your client. I was able to get you life insurance, but they declined your CI. So, and that happens. We don't want your client looking elsewhere. We've got a solution for you. Our product is designed to help you maintain that fence around your client. You don't want this to happen. I always refer to this as you don't want a shark in your pool. You don't want to go to your client and say, I couldn't get you critical illness, sorry, and then leave it at that. Because you run the risk that the client runs into an advisor down the road that can get them So critical illness on a guaranteed issues basis. If that advisor is good, you know what they're going to ask them next. I've helped you with your CI. Can I look at your life insurance? Can I look at your investments? Now you've got another advisor. You've got that shark in your pool. You got another advisor messing around with your current client, which was not necessary. We've got a program to help you keep the fence around them. So our plans, I'm not going to go in a deep dive into the plans, but our plans are set up on a tiered basis. So I'm going to show you a couple of the neat features that we've got in the next couple of slides. And people will ask me, these standard built-in features that you've got, Dave, does that apply to tier 1? Does this feature apply to tier 2? The plans are all the same. The tiers just mean, how much can I buy? All right, tier 1, it's guaranteed issue. There are no questions. Clients can get up to 50,000. Give you an example. My sister-in-law has MS. She's not getting critical illness anywhere. She will not get through underwriting having MS and in a wheelchair. She could buy 50,000 from EDGE. Now, she would never be covered for MS because she already has it, but she'd be covered for the other 22 list of conditions. So there's no questions with tier 1. Tier 2, there's a short health questionnaire. You can get another 25 or 50. So now you're up to 75 or 100,000. Now, there's a couple questions we do not ask. We don't ask any family history questions. And we also don't ask, hey, have you ever been declined for CI in the past? We sort of assume you may have. That's why you're looking at a guaranteed issue product. But we don't ask that question. And the way the tier 2 questions are set up, it's accept or reject. All right. So an underwriter does not get a bite of the apple. So if they say no to everything, now you're at 75 or 100. If you say yes to anything on the app or when you're quoting it, a message will pop up and say not eligible for tier 2, but they can always get the 50,000. They can always get that tier 1 without the involvement of an underwriting. There's no underwriting whatsoever. Coverage is to age 70, and these are the coverages, 23 listed conditions. I've highlighted in light blue what you call the big 3. They make up 85% of claims in any CI policy out there across the country. I also have in dark blue another feature, standard feature, cancer recurrence, I'm going to talk about in a second. But so these are the coverages, the 23 coverages. It works just like a traditional fully underwritten program where they need to survive 30 days. Where we're different than a fully underwritten program is that with our plans, we do have what you call a 24/24 pre-X. Due to time, I don't have a lot of time on this presentation to dive into it. Certainly, your sales consultant would be able to explain it to you, and we do have handouts to help you explain it to your client. But essentially, there is a pre-X, a 24/24 pre-X, based on the date of the application, because there is no underwriting. We want to make sure we're not buying claims. All right, so those are the coverages. Now, we've got some things that are standard features. The first, this is really good. This is what I had highlighted, cancer recurrence. This is amazing, especially with a program where there is no underwriting. We have a cancer recurrence benefit built in. So what this means is if the client had already been diagnosed with cancer, and then while they're insured with the EDGE, a new diagnosis of the same cancer types made, that would be paid if they've gone more than 60 months treatment-free. So that's not 5 years since you've owned the EDGE policy. That could be at any point in time. So you could have a client who comes to you and says, I'd like to buy some critical illness, but I had colon cancer 7 years ago. You're probably not going to get that through your traditional underwriter. Maybe you can, maybe you don't. The purpose of this presentation, assuming you can't, you could look at the EDGE and you could write them up. You could get them tier 1, 50,000, because cancer is going to be a question in tier 2. So they got $50,000. They're covered for any different type of cancer right away, and the other 22 listed conditions. they're also covered for that colon cancer once they've gone 5 years treatment-free and it comes back. Now, in my example, the person had it 7 years ago. Let's assume they've been treatment-free for 5 years. Now they're covered for that colon cancer, even though they had it in the past, through the EDGE from day one. A really, really good benefit. A lot of people who are big proponents of critical illness are people who have been through a critical illness, certainly cancer survivors. The other thing we really have that's amazing is our second event benefit. Most CI plans out there are what I would call a one and done. You have a plan, you make a claim, you get paid, and then you're done. With the EDGE, we actually have a second event built in to the program, and no extra charge. It's a standard feature, so you could actually claim twice under our plans. Now, for it to work, the second claim can't be in the same category or bucket as the first claim. So the three buckets are shown on the screen. They're your cancer, your cardiovasculars, and all the other conditions. So to use an example, your cardiovascular conditions, let's say the first claim under the EDGE is heart attack. They survive 30 days, they get paid out. They couldn't, a few years later, have a stroke and get paid, because that's another cardiovascular, but they could have anything else. All right. Just like category C, you couldn't claim for Parkinson's and then down the road claim for blindness, because they're in the same category. So the second event's going to be in a different category as the first one. And once the second event is paid, that's when the policy terminates at that point in time. All right. So, when I was a sales consultant before I moved into this role, I'd get asked from time to time, Dave, with your CI programs, do you offer return of premium? We don't have return of premium, but we've got a second event benefit, which is really good. So, to sort of summarize our CI opportunities, take a look if you've got a client that's been declined. If they've been declined for any reason, as I said, they can all get 50,000. If it was just for family history, and they're otherwise healthy, as I mentioned, there's no family history questions in tier 2. They get 100,000. Maybe you got a client who has a traditional fully underwritten CI program, but they want more coverage. It's been a few years. They want to get some more coverage, but maybe their health has changed, and you can't go to your underwriter to increase that policy or get them a new one. Hey, you can always get another 50. Keep that policy, obviously keep that, but you can always add another 50,000 with EDGE. The third one, this is a big one. If you've been around long enough and you've written enough CI, you're eventually going to deliver a check. And when you do, hey, you could write that person up through the EDGE for another 50,000, no questions. The client will probably look at you and say, I'm not going to qualify for coverage. You just handed me a check. You're not going to be covered for what you just got paid for, but you'll be covered for 22 other conditions through the EDGE. And then maybe you've got a group plan out there that you're the agent of record on, and maybe they're interested in bumping up their plan, adding on some CI for their employees. You can add up to 50,000, as I said, with no questions, and there's no impact to that group's claims experience. All right, so now we're on to the last gap, or last opportunity, and that's our small business product, our multi-life programs. And these are trends we're seeing in Canada. There's a lot of downsizing in Canada's businesses. The average is under 6 employees, which is interesting. As I mentioned, prior to the EDGE, I spent 23 years on the group side. When I first started in group, we considered an employer with less than 50 employees small group. That's like a medium large group now. There's lots of companies with averages around 6 employees. A lot of them are solely family businesses. There's a lot of unattractive occupations or industries out there that group insurers don't like, or maybe they're new in business. There's a number of things that we're seeing right now that are not a problem with the EDGE multi-lives. In order for it to qualify, these are rules that you're going to see in the group rule. Okay. there has to be an employee-employee relationship. We need at least 3 employees. Everybody's going to take the plan unless they have a spousal waiver. We do it on one billing. It's always the first of the month where we start. The employer is going to pay at least half the cost. So these are requirements you would see in the group world. Now, where we're a little different than a group care or a traditional group plan is that everybody has to have the same health and dental plan, but above that, you could customize that per employee. So additional add-on products, I'm just showing you disability, critical illness, AD&D, those, because those are all guaranteed issue products. There's no underwriting. You can add those products to the employees, and you can actually customize that part of the program based on what the employees or the employer wants to have. Our plans work on a core plus optional upgrade model. So the upgrades are your health, the dental, and the drug. Okay. The employer chooses the base plan, and then either 1 or 2 or 3 of them or none of them, he or she chooses a plan for the employees. But as I said, it's just the health and dental that we're doing on a group basis. All the other coverages can be done, can be customized beyond that, and payroll deducted through the employer. And that's what small employers are looking for. They're looking for options. They're looking for flexibility. And sometimes small employers would say, yeah, I'd like to offer something to my employees, but I don't want all those other coverages. I don't want life and AD&D and dependent life. Not a problem with us. We can just do the health and dental. These are things that group carriers generally, and I've got it in bold and italics, generally don't like. I'm not saying they'll never touch it. They generally don't like it. The companies that are new in business, they want them around a year or 2 before they'll give you a quote. Sometimes they don't like the high family content. That's when you've got a company with, husband, wife, grown-up kids all working there. They're leery with some occupations. There's certain industries that they won't touch. A group carrier won't touch. They won't cover part-timers. Group plans will have a minimum number of hours worked. So they generally don't want that, and they generally don't want to offer just the health and dental. I'm showing you this because none of these are an issue with the EDGE multi-life programs. We can do any of this stuff. Risky occupations, give you an example. 9 years I've been with EDGE. I have yet had an industry where we haven't been able to quote. And you know what? In fact, I'm going to touch wood because I've just jinxed myself. All right, not a problem. None of these are an issue. Talk to your sales consultant. They'll certainly help you out. And this is sort of a chart to show you the difference between the two. We've talked about the first couple, actually the first 3. So the fourth one I want to mention, where we're different than most group plans, is that we pool our programs. It's 100% nationally pooled. So we renew our program once a year, October 1st, and we lump together all our individual plans and all our multi-life group plans and do one big renewal. And for those of you that are well-versed in group and how renewals work, it's all based on the law of large numbers. The bigger the group you've got, the more consistent, the more level the claiming patterns would be. So certainly renewing a block like ours is like doing a $15, $16 million group renewal. The pricing is going to be very stable, as opposed to doing renewals on a 5-life group, a 3-life group, a 4-life group. So you can say to your prospects or your clients with the EDGE, they don't use, it doesn't matter how many claims you or your employees use up in a year, your rates won't change based on your usage. Your rates will only change if the EDGE changes the rates for all their customers. And in fact, over the last 12 years, we've had, on average, it's been about 3% renewal each and every, not every year. Some years a little higher, other years it's been 0. We've averaged 3% renewals over the last dozen years. And again, coming from the group world, that's really, really good. All right, so these are the opportunities. I've talked a little bit about these. The one I should really highlight is the second last one. Maybe you've got people that are, maybe you've got a decline from your traditional carrier. Right? You've gone to market, you've got your go-tos that you go to on a regular basis, and you got a decline. I will guarantee you, regardless of the reason why you got a decline, I'll guarantee you we'd be able to help you out with that program. Okay. And a lot of our advisors, what they're doing, they're using these group multi-life programs to get in and into these companies and mine the employees to get more referrals, to sell more of their life insurance and their critical illness and their investments. They're using this. They're not looking at it as a for life group. They're looking at it as for now opportunities to sell more of their core products. So I've got 2 minutes here. We're gonna wrap up because I know many of you need to get on to your next session. A couple of the programs that we offer, the advisor incentives. The first is our clubs. We have a first, second, third division club that pays out a bonus based on the pool. First division is $300,000 for the top 50 advisors. The amount that you'd receive of that 300 is proportionate to how much did you write versus the other 49 advisors in the pool at the end of the calendar year. If you're not in the top 50, but 51 to 100, works the same way. It's a $50,000 pool. And then we've got a $25,000 third division pool. So the top 150 advisors at the end of the year share in $375,000 worth of bonus money. Last slide. We still have conferences. Unfortunately, the last one got canceled. We're got our fingers crossed for next January in Cancun. We take our top 10 advisors and guests to an all-inclusive at the Moon Palace. Some people are interested in pools, some bonus pools. Others are interested in conferences. Some don't care about either. Some like both. Totally up to you. If you're interested in either of them, talk to your local EDGE sales consultant. They'll put a plan in place for you and keep you on track. So at this point, I am at 5:02. I promised to finish on time. I am a man of my word. So I want to thank all of you for your time today. I hope you found it informative and are going to go and spring clean your files, your client files, and try and identify one or maybe more of those gaps that I talked about. But certainly your EDGE sales consultants are here to help you every step of the way. Thanks, everyone. I hope you guys enjoy the rest of the IDC University Day. Take care.